Good morning. This is Mike Yonkman, Chief Investment Officer for Ankerstar Wealth, giving you your weekend update. It's been an exciting week for me. I got to spend the early part of it in New York City. And I wanted to say one thing I did for our team is I went on a financial district tour and I saw Alexander Hamilton's grave. They said it's luck if you throw some money on the grave. So while most of the tourists, and they just threw a penny or a quarter. I didn't have any change on me, but I actually, when they kind of left a little bit, I threw $1 out there for us, for our team. So hopefully we have good luck in investing this year. Today's topics I'm going to hit on more highs. So hey, it's a great week so far. Deflation. Some prices have actually went down on some things. That's great news. Sector rotation, day trading, and a little commercial for Gen Z. But before I get started, I must remind you this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and mine alone. So let me get started with sharing my screen. You can see the S&P 500, new 52-week high. Here's our graph for the year. Wow, incredible. I won't spend too much time other than to say I love seeing this every week. On the NASDAQ, we did see it dip a little bit on Thursday, and that'll lead into my topic on sector rotation. But still, obviously, the trend since the beginning of the year is fantastic. Next topic, deflation. So we talk about inflation all the time, housing costs, auto insurance. I've covered it, but something's actually going down in price. When I saw this article, I clicked on it. It was clickbait. I was like, I got to see this right away. What has went down in price? Apples down 12%. Maybe you knew that one. That's kind of a decent jump. Ham, potatoes, rice, cheese. And those all make sense because one of the things that we saw in the inflation report is food that you cook on at home has not gone up lately, at least year over year. So eating out still has, but home food hasn't. So you can see that reflected on in this food at home group. Energy, gas prices are down a little bit. The supply and demand, this can fluctuate quite a bit over the summer. And then some of these other items, telephone hardware. I don't know enough to say that it's really went down. Maybe last year's Apple iPhone model has went down by 12%, but then there's a new Apple iPhone model coming out that will be more expensive, I'm sure. So I'm not really sure that's that, noticeable. Dishes. This one affects my wife, used cars and trucks. She's in that business, so that's good news that they've come down. Suits, I have a suit, and not many people buy those as much anymore, and some other items. So it's good to see inflation start to curb. We saw that on Thursday's CPI report, and this is just some of the components within it. On Thursday, we saw something, and we saw after the good news on inflation came out, we saw tech stocks sell off while the market didn't go down that much. And what I'm going to call that is some sector rotation. So really what we saw in the morning was good news. But we saw investors or out there or even traders say, wow, tech stocks are so expensive. All this other stuff is on sale and I'm buying it. And that's what we kind of saw in the market Thursday. All of our holdings, our tech holdings, Apple, Amazon, Google, Nvidia took a big drop. They went down. But we also saw things that were like value stocks of the S&P 500, things that are a little bit more guarded, cyclical, they went up. And that to me was a good sign. The good sign is everything didn't go down. So we'll see some sector rotation, and we were prepared for that in our portfolios because we have some diversification. Obviously, it is definitely tech heavy. I won't get your stock portfolio may have went down Thursday, but it didn't go down as much as it could because we had some good diversified ETFs in there. Next topic I want to hit real quick. I saw day trading. A lot of times when I meet with new clients, they ask, do you guys day trade? Absolutely not. We do not day trade. I am very familiar with what day trading is. And in this little article here from the Motley Fool, it's a short-term holding. I buy this stock, I sell it next week. I actually, sometimes, a lot of times day trading, I buy this stock, I sell it 2 minutes from now, trying to make money with leverage. It says short-term holding, more volatile, less, it's not even diversified at all, typically at a day trade. Whereas investing, we buy something, we hold it for the long term, or we rotate out of them at some point. But here's the key difference I want to say on day trading. Day trading is a zero-sum game. If I make money, somebody else loses money. Investing, we all can win together. The whole stock market can go up. So when it says that in the short term, somebody may make money in day trading, but over the long term, they lose money, the reason why is there are professional day traders out there that are paid millions of dollars by, I'll just say some of these big, huge firms. I'm sure JP Morgan Chase and BlackRock, and they have professionals that have the best computers, best research, close to the markets, because these trades execute in milliseconds. If you think you're better than them, then maybe you can beat them in day trading. But what typically happens, the reason they get millions, is they're taking the money from 50 or 100 people out there thinking that they can beat them. So we definitely do not day trade. We are investing. And then the last thing I wanted to hit, it's really just kind of a preview, but we talk about Gen Z, and the ages in here says 16 to 22. I think lately it's like maybe 17 to 27 is Gen Z. And are they investing? And what we're seeing right here, and this article may be a year old, Gen Z hasn't invested as much, which makes sense because they're just starting to hit their career. I'm obviously not Gen Z, but it's very important though to teach about investing and help them get off to a great start, because they have a huge advantage that many of you listening to this right now do not have, and I don't have. It's time. They have a long set of time for their investments to go up. Some of the things I thought were interesting in this article is, computers better than humans for cost and fees. Actually, that one's pretty much in line. But this one was really, really good, was humans viewed to have an advantage in investment advice. Now, if you're a boomer, it shows 93%, believe humans understand my needs. And it went down a little bit to Gen Z. But I think what really showed me something with this is the trust in technology. And this is down here, computers versus people. And this is where we really see the boomers versus Gen Z, even Gen Z versus Gen X. Computers are easier to work with. We see a lot of difference, a shift. So there's certainly an emphasis on technology, like there should, and I'm glad they're easier to work with. But I'm going to put out another video later this week specifically just for Gen Z investing. And certainly if you get that and you're not Gen Z, but you know someone that is, that's 17 to 27 years old, forward it to them. That's all I have for today. I hope you have a great weekend. Thank you.